Okay, let's start this back over. Let me go back to our logo screen. Then I have to go all the way back to the beginning again. I have to go do this for the disclaimer. Sorry about that for folks. Hopefully this is gonna work this time around. Okay, sorry about that. OBS has disconnected me like crazy. I've tried to increase the amount of processing power OBS gets, so I'm hoping that this time it stays awake. So let's go back through it quickly. Wednesday, FOMC. Tuesday, JOLTS. Wednesday, FOMC. This is going to be a very volatile day, so if you're not done trading by 8:30 or 9, be careful on that morning. Then we've got unemployment claims on Thursday, as well as ISM manufacturing PMI, followed by non-farm employment change and U of M consumer sentiment. So we have a lot of landmines this week. This is going to be a very, very volatile week. Just try to keep that in mind as you go forward, and be careful trading. But it's not to say that there aren't moves, but we will be trading in the morning and looking for trades in the morning. So let's go look at the charts here. So let me bring over NASDAQ on the weekly. Actually, we know on the monthly chart we've hit all-time highs on the monthly. And we also know that on E-mini S&P monthly, that has not, right? So we can see NASDAQ in the background, and we can see ES has not, but the Dow has as well. So the Dow hit its weekly high again in this month of January, and coincidentally has broken up off of that top and is now beneath that top right now. So we have NASDAQ barely breaking above the all-time high on the futures contract, the Dow breaking up all-time highs, and E-mini S&P. It's not the end of the month yet, but we have yet to see a short-term high form here. So this could still head higher, right? These monthly candles aren't over, so we need to be careful about immediately going short and trying to think that caught 18 handles in NASDAQ. Yeah, there's a beautiful new week opening gap there. Very, very nice new week opening gap. I don't trade Asia, but if you do, that's phenomenal. It bounced straight off of the old new week opening gap, and we'll cover that in a moment. But I just wanted to know that we're taking a look at this combo here and this here. So from a weekly chart, we see that last week. Now remember, these are our weekly candles here, right? So you can kind of see how this is our range. We created a higher low and then continued higher, and now we traded up to this high, and now are trading up higher still. So given that we've made all-time highs, there's naturally going to be people and liquidity having been taken there. So there's naturally going to be people shorting here, or trying to short and choose this as a top. We are not going to do that, but we are going to be cognizant that our daily, our swing, actually our quarterly shift is pretty soon. So if we take a look at the daily chart, we can kind of see how beginning of January, we're towards the end of January now, right? So on this daily chart, we've headed up for quite some time here now. For the past 3 months, actually, we've headed upwards. So is it time to go lower yet? Well, we need to see movement displace well below short-term lows and blow through a lot of them, specifically blow through weekly short-term lows. Now, the only short-term low I see formed is down here. So it would be easier if we consolidated here, created a short-term low, and then allowed us to take a displacement and show a displacement weekly. These are weekly candles, by the way, right? So given that we're at all-time highs, it's hard to tell if we're just going to continue expanding and when we will sell off. But for the time being, we are going to take it day by day. So what does today look like? Well, so far, we are getting an initial candle downwards and then upwards. So we opened, traded lower, and are trading higher. So we traded down to this bullish order block here once, twice, and we haven't broken through this short-term low just yet. This short-term low will be key though. It's a short-term low formed within a daily fair value gap, a buy side imbalance, right? So because we took out a monthly long-term high, I need to see how price reacts in these coming few days. Does it consolidate here? I would expect it will. I can't imagine if we see some pretty big movement, it's going to be this week. This is the week that we're going to learn, are we going to head lower? Is the market going to shift to a sell side program, or is it going to consolidate, or is it going to reach even further all-time highs, keep on squeezing out shorts, and then eventually keep this as an election, considering it's an election year, will we continue creating all-time highs for a while until we get absolute greed come into the market, right? Then we'll see our fall. But until that point, let's take a look at the charts otherwise though. So on the daily chart, actually on the weekly chart, we can't tell. We created an all-time high up here, right? So right now we can't tell, is it willing to go down to take out this buy-side imbalance and maybe 50% of that buy-side imbalance here? Is it willing to come down to 50% of that buy-side imbalance and actually also, if you recall, bounce off the top of this old weekly SIBI now, which is now a balanced price range, right? So it can go to the bottom of that SIBI, but I see this as a balanced price range now. So if price were to dip down, I would expect it to maybe dip down to halfway, maybe all the way down here, but not as far as this balanced price range. If it's going to continue higher, definitely sensitivity around the weekly fair value gap top. Yeah, absolutely. Absolutely. So this key level is going to be important here throughout this week. This 17,409.25 short-term low, or last week's low, that's going to be key, right? So we need to see how does price react at the top of this fair value gap on the weekly. So at some point, I think we traverse and travel down to that area. It could be just FOMC really blipping there. It could be non-farm payroll on Friday. It could be anything this week. There's so many different landmines that could happen this week from Tuesday, Wednesday, Thursday, and Friday. So this is a week where, in my opinion, leveraging down or at least taking profits quickly is going to serve you better. You might have your, you might want to hold forever. That's fine. Do what you want to. I'll still be keeping the same leverage here and waiting and watching for a higher time frame things to form. Okay, so we are assuming that this is heading higher first. Where can it go? Well, if we are looking at the weekly candle, then we have this candle's wick, right? So we want to see how it reacts roughly at the midpoint of that wick. So let's say 17,660.75, we'll say. And we will make that into a weekly orange line. And we will make that a dashed line so we know that's a weekly wick consequent encroachment here. Oops, what did I just do? One week consequent encroachment. So I'll have that labeled on our charts. So we're going to, on the upside, that could be a potential target. On the downside, the obvious target is 17,409.25, right? And this weekly buy side imbalance. Now, that happens to be coupled with this bullish order block here, but it doesn't quite go over it. So I like the return to this weekly balanced price range. I like the return to no more than the consequent encroachment, the midpoint of this. And let me remove this because I don't know what that is. And I like us going to the middle of that, you know? I would prefer to see us go to the middle of that and then go from there. Let's go down to the daily chart. So the daily chart has a low, high, lower, low, higher, high displacement in a premium though, so you have to be careful, right? This, while it is a bullish breaker, it was a bullish breaker that was referred to on the way up to make all-time highs and to reach above buy-side liquidity. So you have to be careful treating this as a bullish breaker. You have to more so now think, okay, is this a high, low, higher high? And do we get major displacement below this low down here this week? If we do, then that is what is I'm going to be looking for evidence of a weekly shift in market structure. So I would look for that on the weekly chart to see if we do. Otherwise, I would look to see this, these bullish order blocks. I would like to see them remain supporting. So especially this one right here, right around that breaker and right around this weekly balanced price range now. So that's what I see for this week. I see us dipping down here. I don't know which whether it's FOMC, if it's JOLTS, if it's non-farm payroll. Any one of these could easily drop this down to this area, but one of them will, in my opinion, drop it down there. Otherwise, we're going to watch this level to see if it's institutional order flow entry drill, kind of like this was institutional order flow entry drill on the higher time frame. We'll see if we drop, like we get a nice big displacement below there. Now, this one tricked a lot of people because we hadn't taken out buy-side liquidity yet. But you have to remember, we just took out buy-side liquidity this time around, right? So, let me do this. So, I need to fix something real quick. Okay, there we go. So remember we had the buy side liquidity taken. And we are looking for evidence of a market structure shift now. We might not get it. It is because it's an election year. Things tend to be a little bit different during election years. Things can do things that they wouldn't normally expect. But in the month of February, we're generally expecting a relatively bullish month. What does that mean? That means that bullish order blocks, high probability bullish order blocks, remain respected. You can kind of see we didn't go down to this one. We didn't go down to this one. I would like to see this one respected as well. See this turn into a breakaway gap, or maybe even just only trade to the half of this and then continue higher. Aiming for none other than that weekly consequent encroachment, and then of course the all-time high, short-term high that just got created. So those are things that I'm looking at right now, and those are things that I think that are going to be crucial for us to be able to identify properly what price is going to do. So let me see. Okay, so anyways, let's go down to the charts and see what we can chart for the daily. So on the daily, we have a down close candle, which we are respecting, but let's take a look at the daily range that we are looking at right now. So from the previous swing low to the previous swing high, this is roughly our dealing range, right? So I can see that return to equilibrium would make sense. Fibonacci optimal trade entry would put us right around this breaker or just below it. It would put us also within this week. These orange lines would put us within these weekly balanced price range. So when we get down there, I have no doubt that we're going to head down. Like, this is my initial draw on liquidity. Down here is my initial draw. Now, the thing is, we have a couple of new week opening gaps close to each other. So I would like to see on Monday a rise up, and then maybe Tuesday we see either a big displacement higher or a big displacement lower. So we need to see Tuesdays. Not to say I'm not going to trade on Monday, but I need to see what the sessions do. I need to see what does Asia session do? What does London session do? And then I'll have a better shot at identifying what direction Monday wants to go. But either way, I'm looking to see if it continues to support bullish movement. We haven't gone bearish yet, right? We haven't seen evidence of a shift bearish yet. So any movement lower and any bullish order blocks, we will take those and assume that and expect that price is going to continue to respect those until we see it truly fail. And that's going to give us a big displacement on the higher time frame charts. And then once we see that, we know that we can think, okay, maybe a quarterly shift has occurred. So that's what I'm expecting on the daily chart. A movement lower would be ideal. Obviously, we're moving higher in Asia. It remains to be seen what happens in London, because look at these. Once we hit this all-time high, this is on a 4-hour chart now. Once we hit that all-time high, we could not create any higher highs. We kept on breaking sell side, right? Couldn't break buy side. We broke sell side again. Couldn't break buy side anymore. We broke sell side again. So right now would make a perfect sense to see an area of oh, I see what I did. Copied the new week opening gap. These black lines are new week opening gap, right? So I think we're going to see a bit of movement up, but I don't think we're going to see take on these highs yet. I guess if E-mini S&P really rallies, then maybe we could see it move, because we haven't seen price move below short-term lows on the higher time frames yet. Until we see that, that can be our first indication that we are heading lower. So I would still look for there should still be some nice moves. I'm just going to be looking for more moves on the sell side, if I can. If it shows me displacement. If it doesn't show me displacement, I'm going to assume that it's going to keep going up, and then we're going to keep on taking discount PD arrays. Discount PD arrays. We assume price will trade to discount PD arrays, and respect those as well. We are in quite a premium right now. So when you're in this much of a premium, it's really tough to continue going. But if you continue to see price being supported, no lower lows being formed, higher highs being formed, no major displacement that isn't met with some resistance there, no huge liquidity pools to the sell side that could be taken in an instant. Those are all things that I look for, and that you should look for too, right? So there's buy side liquidity above us, sell side liquidity below us. When there are cases to be made on both ways, we need market to tell us, hey, what direction are you going to go in? Because every single week, there's a power of 3, right? Market could either open, have a high, there's a low and a close, or it can open, manipulate down, and then have a high, and then close, right? There's only 2 things that can happen there. On what time frame, Jay Whitway, on what time frame does displacement mean the most to you? So I would say weekly and monthly. The monthly chart is key, because we see that there's bullish order block. We jettisoned from there in the past 2 months and reached all-time highs. But when I start to see this on the weekly, that's when I know for sure on the weekly chart that we're in a move. Like, take for instance, just look at this chart, for example. From previous times, on the weekly chart. Let's see. You don't see major displacement yet on the weekly chart, right? You see bullish order blocks being respected, short-term low there, short-term low there. You don't see displacement on this. It does trade below it, but you don't see displacement below it. And then it keeps on rising, right? But then once you create these short-term lows, you start seeing displacement and big displacement below these liquidity pool areas, right? So when you see something like that, that is enormous. That is indication like we took out this liquidity pool and we took out this liquidity pool on the sell side. Now you can start looking for optimal trade entries. Boom. Fair value gap, SIBI, optimal trade entry. Same thing here. Comes back to it. Drives even further lower. Same thing. Can't make higher high. So we assume any movement up is optimal trade entry. And then slam that lower. Now here, we reached a really key level on the monthly chart. So when that hits that, you need to look to see, okay, well, now what's happening on the weekly? Well, short-term highs, short-term low, not a lower low, displacement higher, movement back down, optimal trade entry to the upside. Now we have our market structure shift, right? Market structure shifts higher, higher, and it remains to be seen what's going to happen in the coming weeks. Yeah, sweeps versus runs always make me less confident. Yeah, I totally understand that. And this is where you're going to need to really go into, if you're an ICT student, I think it's season 2016 mentorship month 5. 5 or 6 is when he starts talking about quarterly shifts and IPTA data ranges. You need to spend a lot of time with that to understand and understand how you can gain more confidence in what you look for. Because it's okay. You can, if you're not ready to take a turtle soup entry, you don't know that a turtle soup entry is gonna reverse. Well, there's ways to know that, and that month is the closest you'll get to understanding that if you can spend a lot of time. I'm not talking like a couple of hours. You're gonna have to spend probably dozens of hours studying that month. It's a really tough month. It's hard to comprehend. I couldn't understand it the first time I went through it, and then I had to revisit it like at least 10 times before I barely started understanding it. So I would recommend studying that area if you haven't already. I mean, I wouldn't recommend skipping to it. I would recommend going through the 2016 mentorship, but either way, worthwhile to know when something's going to shift. Now, that's just typically you're going to be taking quarterly shift theory, IPTA data range theory, and it's a tough one. But if you get through it, you'll have a better confidence on when things are going to sweep and when things aren't going to sweep, when things are going to continue running through and when things are just going to come high, low, higher, high, and then displace lower, right? You're not going to be perfect every single time, but if you don't get the perfect entry, but you have an idea of what price might do, then you can think about things with the consideration of power of 3, right? You can think about them in, hey, this week can only open somewhere. It's either going to open head higher and then drop lower, or it's going to open head lower and drop head higher, or it could do like one of these like seesaw type things and then end higher. It doesn't have to end all the way higher. But either way, you're looking for that major expansion midweek. Around Tuesday, Wednesday, Thursday is when you're looking for that big expansion movements. So in my weekly bias for this week is not that we're going to head higher, but that we will likely consolidate. Now, if I start to see displacement above this short-term high and we fail to make a lower low again, then that will shift my bias to something more like this, right? For the time being, at least up until potentially these short-term highs, if I start to see them broken with energy. I have to see them broken with a lot of energy, though. It can't just be like this, where it's a run-on stop, right? So this wouldn't mean, at some point, this was a black candle. right? So I would need to see it close. I would need to see a candle close and see that start to really, really run up. Like this candle, that's displacement. That's huge, right? And what was there before? Well, we had this previous high here. So we saw displacement, we saw displacement, we saw displacement. We assumed price would head down a little bit. I thought it was going to head down more before taking this high out, but you can kind of see how it was in a hurry. And lo and behold, we took the all-time high out and now are kind of just in this range where we're waiting to see what happens. It's starting to consolidate. You can see that very clearly, right? You see the bodies of the candles. They're staying within this range. It's constricting quite a bit. So these manual interventions this week are going to be really, really dangerous. So be careful with your entries. Wait for them to happen and then try to enter. Otherwise, you're basically gambling. So I do think that we will, if we don't head lower, it's going to be like one of these kind of weeks where it consolidates. It runs lower, runs higher, runs lower, eventually ends like maybe a little bit green. But I think it's going to target this area at some point. So that's my theory. I'm going to be looking for shorts. I'm going to be looking for evidence first of shorts. And then, only then, when I see displacement, will I consider taking shorts. Now, remember, the daily faked out a lot of people before it reached a monthly. These blue lines are monthly levels. They're monthly intermediate term highs. So now it's reached that level. Price and the algorithm should be okay with us once we see displacement lower, should be okay with us seeing optimal trade entries and then heading lower. If it's ready to turn around, it might want to squeeze some early shorts out. But one thing I also want to take a look at is bar chart. So we want to take a look at this. We don't care about volume. We want to see our commitment of traders, and we want to see our open interest. So on this chart, this shows you that commercials, which is the big wigs. So you can kind of see here they're heavily more so on the short side. And let's look at a year's worth of data. You can kind of see how this was minus 47,300, minus 42,000, minus 38,000. So their shorts are getting less short at this time. Or rather, they're covering some of their shorts. Now, the thing about this, though, is you see open interest. Open interest continues to rise. It's almost 300,000. So we haven't seen the commercials finish hedging their shorts yet. They are still shorting into this rise because commercials, they layer in a lot of their movement over time. So they can be short even when the market's going up. So we are waiting. We're waiting for that moment where open interest drops precipitously and we see price plummet, but we see open interest plummet at the same time. This is, again, in another one of the ICT, I think, 2017, 2016 mentorship videos as well. So we're watching this on a higher time frame and applying it to our charts here. If you don't know how to do it, go study those lessons. I'm not going to rehash those lessons here, but it's worthwhile spending some time and sticking to that. Jay Whitway gonna stick with low leverage and small gains this week. Yeah, I mean, if you feel comfortable with it and you see a really, really good setup, by all means, go for it. You can always keep a runner and let a runner keep on going. If you use 3 contracts, you can let one go. You can take 2 profit-taking levels, and then you can let the third one go or get stopped out, on your original balance. So there's a lot of stuff that you can do with 3 contracts. Or 2 contracts, whatever's in your risk parameters, right? So for the time being, Monday, we never know what's going to happen on Monday, right? So this was Monday last week. We saw a down close candle. Price ended up heading up higher, achieving a weekly high on Wednesday, and then Thursday and Friday dropped down, right? So it reached a really key high and it's dropped down since then. So we have two new week opening gaps right close to each other. This typically means that you're going to see ping ponging between these. So just be aware that those two new week opening gaps, the one from last week and the one from this week, are very close together, close to each other. When you have stuff that's that close to each other, typically it's going to be referred to quite a bit. So first 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. So I don't need to refer to this one anymore. I only keep like 4 or 5 on my calendar at any given time, so I don't need any of these anymore. There's plenty of other gaps and key levels for me to refer to, but there's at least 1, 2, 3, 4, 5 on the chart that if it comes down here, it's going to ping pong through these two. But right now, it should ping pong through these two new week opening gaps that you see there, right? Okay. So that's it on the 4-hour chart. I think that there's not much that we can do on a Sunday before the week, but this is building our sentiment, right? My sentiment. You need to build your own sentiment. But from what I see on the higher time frame weekly charts, I would prefer if we saw it move down into this area first before heading higher. It could just create, like, you know, continue to break through these and keep on going if we see E-mini S&P continue moving upwards and breaking upwards. Because remember, E-mini S&P is weak. Like if I compare the weekly candles here, right? So you see how this was NASDAQ's weekly candle, right? And then you see, you can kind of see the difference between these two, right? New week opening gap, old new week opening gap. Giant candle to the upside. Giant upside and then a wick down. And now a little candle waiting. And we'll see if that wants to head down to new week opening gap once more this week and then head higher. Because there's also a fair value gap, a buy side imbalance here, similar to how there's one over here on NASDAQ as well. So, you know, you can see those confluences. You're going to need to pay attention to E-mini S&P. It's going to be one of the more important charts this week. And then if you take a look at the Dow had a giant candle last week, and it did not trade back down to its new week opening gap, whereas NASDAQ did. So these might need to trade down to their new week opening gaps first. And that would take NASDAQ down into this weekly area. So WEF, do you use real-time hour gaps? Yes, I do. So this chart is a real-time hour chart on the 15-minute. I use this as a fair weather chart just so I can see the various gaps, right? Like, for instance, on Friday, you saw this gap form in the morning. You saw this form. You saw it attack that real-time hour gap, come all the way up here, and then fail to make a higher high once more, right? From this close to this open, this whole area is a gap, and it pretty much got most of it before it absolutely got crushed at the end of the day, right? Taking out short-term lows and continuing to take out short-term lows. So every single day you get a little bit of information by using real-time hour charts. I would highly recommend it. I don't put it on these charts, but I recommend you have that on your chart if you have room on the other screen, because it'll be important for you to watch that as well. Each day we watch that on the side. And yeah, real-time hour gaps are really, really important. I mean, a lot of people aren't switching in between the two, electronic trading hours and real-time hours. So give me 1 second. My wife is texting. 1 sec, finishing stream. in a few minutes. Okay, so looks like this is good timing because I actually have to head off to talk with the wife a little bit. She's on a business trip, so or a trip for vacation, I think. I don't know. So I need to unfortunately end this stream today, but you know where my bias is for the week. You know what we're looking at on the weekly. We walk through the weekly on different charts. We walk through the daily on different charts. You know what are the key levels we're going to be looking at on the daily and the weekly. You know all of those already. And if not, you can pause it here and I'll cycle between the weekly and then the daily. You can always just pause this last bit of time and then the 4 hour. So you can always just click and pause, watch this and pause and see what kind of levels I've got there, right? You should have those levels on your own chart if it makes sense to. Some people don't like the clutter, and that's okay. As long as you know what that clutter is, it's fine. There's nothing wrong with it. But I will be eliminating some of this stuff here and updating this stuff because this is on a lower time frame now. So yeah, I think that's it for today. Watch for the 2 new week opening gaps. Watch for price to really ping pong between these every time it reaches in between them. So just observe it and see what happens. Yeah. Jay Whitway, WEF, thank you for joining. Appreciate you being here. I hope this has been helpful. Make sure you don't let me influence your own bias, right? Make sure that you think about this and look at the charts. Say, hey, this is what Johnny pointed out. Do I agree with it or not? Do I think that it will retrace before heading higher? Or do I think it's just going to blow up and aim straight for that weekly consequent encroachment and then head higher? You know, like what is your bias for the week? What is your candle going to look like? If you can think about that and come up with a solid plan based on what you see price doing on Monday, then you're going to have a much higher probability of predicting the weekly expansion. And that's where your trade is at, right? Brandon Marks, thank you. Hey, no, thank you for joining in. Thank you for joining in. Yeah, so I appreciate you guys all being here. I'm going to go talk to the wife. Appreciate the likes. And I'm sure everyone's already subscribed, but if not, I appreciate you. If you want to, you can just not subscribe and watch me, or you can subscribe. Always love having some new folks here. I think that I believe. Let me check if Apex is still running this thing. Okay, so Apex is running the 1-day pass for one more day. Oh, so tempting to get another performance account. I'm not gonna do it though. I have enough. I have enough performance accounts right now. So, but be careful. I want to make everyone clear. This link, yes, this is my affiliate link to head to like Apex Trader Funding, where then you can get the 50K accounts at 80% off. Sorry, with this code. Be careful. You don't need to buy more than one in the beginning. Like you really only need like a 25K, because you can trade micros on that too. Oh yeah, what's a day pass? So this is so that people who know how to trade or know what they're looking for, you can end up passing the whole thing in a day. I think I did that. I showed an example of that maybe 2 or 3 days ago, where I limit order entry with 100 micro contracts. That's basically 10 NASDAQ contracts. And I look for 15 handles, which gives me about $3,000, right? The goal for these 50K accounts, the profit goal is $3,000 worth of profit. So what this 1-day pass means is, hey, if I buy an Apex evaluation account and I pass one of them in 1 day, like if I pass it on Monday, then come Tuesday, I'll get the form that, and I actually took a print screen of it this time so I can show you what that form looks like. But I will get the emails and they will say, hey, congratulations. Congratulations for passing. You know, you've passed your so-and-so account and you're ready to log into your screen to choose which fee you want to choose. So let me bring that up and show you. So I took a few screenshots of it here. So you'll basically get an email saying, hey, congratulations, you passed your evaluation account, and you're now need to come, you know, you passed your evaluation accounts, you've got $3,000 worth of profit. You're gonna get this email that you say, hey, like sign in here, then pay the fee, and then go, you know, sign the disclosure. And what'll happen is it'll ask you to choose when you log in. It'll ask you to choose, hey, do you want to pay by a performance account monthly fee, $85 for each month, or what I do is I choose and I pay the lifetime fee of $140. Because if you think about it, $80 a month, that's $160. In 2 months, you'll have paid for 2 monthly account fees. If you can survive and not blow it in 2 months, obviously. So this is what I mean when you pass, because then you'll end up finishing, you know, you'll sign it, and then eventually you'll get a notion saying, hey, your performance account is active, and you can then do your performance accounts there. So yeah, so that's what 1 day pass is. I wouldn't recommend it for new traders, but if you really know how to trade already, then you know what setups you're looking for, which ones are pristine, then it's easy to pass these in 1 day. They give you that grace, so that you can start getting onto real money funded accounts faster. I do not recommend doing this. If you are new, do not buy multiples of these. I know some of you are, and that's good. Some of you have already proven that you can trade, and that's totally great, right? But for those of you who haven't yet, these 80% off sales, they are nice. They used to only have 50% off sales, but now they're testing 71% off sales, 80% off sales. Sometimes during holidays they have 90% off sales. So if you really, really want to wait, then you could do that too. But you only need, like, you should just, if you're just starting, you should just buy the lowest one here. You know, you don't need, because think about it, 147 per month times 0.8, oops, 147 times 20%, sorry, that's about less than $30 a month, right? Oh, Jay Whitway, you're in a Top Step combine. Yeah. I'd love to hear from you, to hear about like your experience with Top Step. I have a few friends that do Top Step as well. They really like being able to take out their money faster, but I don't like Top Step's infinite trailing drawdown. I don't like it very much. I think it's not as nice as Apex or as forgiving. Once you get past the point where you can take out money, I don't like how it continues to trail. So let me know how that goes. Hope you do well in it. Good luck on that combine. I hope you get to the second stage and get funded. Yeah. So on Twitter, I use Twitter for the most part. So if you go to these, like, you can kind of see here, there's 7 more links on my YouTube. If you go here, this will connect you to my Twitter. And of course it doesn't let me without signing in, but I'm more active on Twitter. So just like tag me on Twitter or DM me or something. I'll try to check my messages a little bit more frequently. Or, I mean, you can try to email me. I don't check my email nearly as much. I use my email address more so for capturing, you know, people who really want to be a part of this. I will start to send out emails, probably just updates. Most people join because they want the access to the risk management tool. Some join just because they enjoy being here and they want to know. But Twitter is probably the one I check the most. I might, like, you know, dick around on Instagram on the toilet, but I don't really pay attention to Instagram much on the messages side. I get too many messages like that are bots anyways. So Twitter, message me there. If you can't DM me, just tag me in a post and then I'll, be able to see it. No big deal. No one's going to care about a Twitter post, just I'm not big enough or anything like that, so I'll see it. So tag me there. But yeah, I think that's it though. Thank you very much for tuning in, and yeah, good luck tomorrow. Make sure that you are trading safe, and yeah, that is it for tonight. You know where my weekly bias is. Let's see if it plays out. We'll know more Monday, Tuesday, and Wednesday. Wednesday especially. FOMC is going to tell us what direction things are going to go. So yeah. No, this is great. So thank you very much. Take care. Make sure you drink a lot of water. Get some rest. I'm gonna go get some sleep myself so I can wake up and trade and look for a trade. See if there is a trade or a scalp. And we'll catch up tomorrow around 6 a.m. I'll try to get on and trade the New York kill zone at 7 o'clock in the morning. So, all right, everybody. Well, thanks a lot for tuning in. I hope you had a good time, and I hope this was insightful. And yeah, we'll catch up tomorrow morning. Thanks so much for staying late, and get some rest, okay? Get some rest, stay hydrated, and we will catch up some more tomorrow. Take care.